Chad Moyer with you in a Nebraska Rural Radio Association production. We call it Cattle Call, and it's brought to you by Wolf Auto Small Town Strong. And once again, Brad Kooima from Kooima and Varilek there in Sioux Center, Iowa, joins us on today's program. And we do have a few things to go through. We got a lot of wood to chop today, so let's just jump right into it. Our streak remains intact. Again, quickly, last week we had another move up in the cash cattle market. What took place last week, and how is that setting us up for this week, Brad?
Well, thanks, first of all, for having me on, Chad. And I forgot about that because I had Joe sub in for me last week, right?
Yeah, and his job is still safe, so you can still keep him for now.
Yeah, it was sharply lower, right? I mean, we hadn't even had to talk about it down there. So, yeah, all right, we'll keep him around for a little bit yet here, but so yeah, we've had it's the bull market of my career, and maybe someplace down the road we'll see something that outperforms this one, but. I don't know how many times we've sat here on your program and talked about, new all-time highs on the cash market. And we're going to do that today again, where I was personally sold cattle today at 230, which is the highest it's been until maybe tomorrow. So yes, once again, we are dominated by what has been a very, very strong cash market. We had a little hiccup in the futures last week, as you're well aware of. But today's news certainly supportive in terms of cash again being the leader.
Well, let's talk about what happened last week. And this kind of gets into a technical discussion, I think. We had that reversal last week and some follow through towards the end of the week. Did that change the technical picture of the futures right now? And if so, does that or will that have a long-term impact on the cash side then?
I think that's a great question. I'll try to get a little more granular on answering that question. So 45 years ago, I was taught that a key reversal or a real reversal has to have three qualifiers. One, it has to be from a terminal area, which is just a fancy way of saying an important area, an important area on the chart. Well, I can't think of something that's more important than all-time highs. So that would discount, if you got a trading range deal where the market has a higher day than the lower close, that's not an important or a terminal area. But new contract highs, all-time highs, I would say that would qualify. It should be done on big volume. That Wednesday volume was something like 145,000 contracts. It was massive volume, huge volume, and a big increase in the open interest. And then the third thing to have think you've got a legitimate reversal is that it needs to follow through the following day. Well, we certainly did last week, Thursday, followed through another chunk lower, of course. So you've got, by definition, the things in place here for what is a technical reversal. Now, somebody's going to watch this and say, well, Brad, you just talked about how good the cash market was. I did, but there are times when the fundamentals and the fundamental analysis and technical analysis don't always match up. And I would gently remind everyone that the funds are the biggest player anymore in our marketplace, and the funds care a great deal about what the charts look like because that's what drives the bus for almost every single fund. They want to have some kind of a AI algorithmic program that if then this type thing. I say always sarcastically, if the red line crosses the blue line. But that sort of analysis is used greatly by the algorithmic type HFT fund type traders. So we've got this hanging there in place now. And then the other thing is, I'm the old guy here on the show, but this is exactly the way the cattle will make a top or a bottom. The news is super, and you just scream right higher, and then all of a sudden it's just like a pop bottle rocket, right? And then it's over. So I'm not sure that it's over. I would have more of a cautionary stance the last few days than I've been for quite a while. Anybody that watches me regularly knows I've been pretty friendly for quite a while. I want to be a little careful with this reversal. Now, what could we do to take that whole thing away? Well, we got to get up and go ahead and take out those highs. It would be a first step, Chad, if we could get August above 208.50 today, and we are dangerously close to doing that on the close, real close. That would be the first step. But the next thing is we just got to get up there and take out the highs. And with the cash as strong as it is, I don't know. It's up to the basis to decide whether we're going to take the highs out of the futures or not. The basis is probably going to get wider and wider as the cash market stays strong, and maybe the futures doesn't. All right.
Let's hit on a news item from this week, and this has to do with a processor here in the state of Nebraska. I understand that Sustainable Beef out in North Platte is starting to receive some cattle. So maybe for our little bit of a side, a little bit of a drill down, what are your thoughts on kill capacity right now as we have this new plant coming online, and at the same time we have these record highs happening in the cash market? What are your thoughts with capacity right now?
We have an unusual situation. I have a slide for this. I should maybe next week. Maybe I'll hold up like Captain 11 here or something. We're going to go into during 2025. We're going to have maybe the biggest disparity since we've been keeping modern records of kill capacity versus the available supply. Okay, and that's assuming that we go ahead and use up the kill capacity. Which we're not doing right now. I mean, there's many plants that are not killing on Fridays. There's a plant in Texas that's not going to kill tomorrow or Friday, for instance. They've been taking these rolling holidays, days off, coming up a cooler clean, every reason to slow the kill down because their margins are bad, because there isn't enough cattle to go around. So the irony, not to beat a dead horse here, but the irony of the thing is not only is the plant in North Platte trying to come online slowly. They're going to kill about 1,500 head, I understand, when they get rolling good. There's also another plant in Missouri that's just starting to get a little bit of blood on the floor, too. It's kind of ironic, at the times when the numbers are going to be the most challenging for the packer. No, we were going to have the biggest disparity of leverage, and good for us. The producer deserves it, where we've got way more capacity than there's going to be available supply. So something's got to give. And I don't know where that is. I don't think that's today or tomorrow. But at some point, everybody's kind of looking over their shoulder, wondering, look, who's going to not kill? I mean, who's going to? I mean, I've been around long enough to know Plainview, Texas, when it closed, Denison, Iowa, when it closed, and I'm not suggesting that that's imminent, but there's some of these smaller packers are going to, I probably think, struggle to stay open here as we go through this year, and really probably until someplace deep into 2026 before we really see a chance to have some kind of little bit of an uptick in the overall supply.
Yeah. Well, and then you talk about looking over your shoulder. Something that I thought about too this week is we've had 2 good solid weeks where packers have been able to buy ahead, deferred delivery. And so then again, you kind of got to wonder, okay, is this something that we should be watching for? Is this something that maybe should grab our attention, Brad?
You really pay attention. I'm impressed here, Chad, because I had it written down in my notes to talk about the 30,000 head, 29,995 to be exact, in the 15 to 30 day for what they did last week. I think the Packer seems to be trying. That's actually why when I came in, honestly, if we'd have done this show Monday morning at 8 o'clock, I'd have said, I don't know, Chad, I think cash is going to barely be steady. I think the Packer bought a lot of cattle. He's got a short kill week next week. There's a holiday Monday. He's only going to kill 4. The fact that he's, at least some of these small regionals have stepped up. The fact that they're chasing here this week is I was wrong. It's better than expected, and love being wrong this way. But 100%, it looks like they're trying to get a little bit of leverage, but at this point, unable to get it done.
Yeah. All right. So just with our last couple of minutes here, thoughts on what is, like we said, we've already seen trade here in the middle of the week. And again, it's looks like we're going to be at record highs again. And some of that is for deferred delivery again into the second week in June is some of the things that I'm seeing here too. So what are your thoughts on what the rest of the week? How do we get to Friday and what might transpire here in this market?
Well, typically I'm going to guess that we're going to get even firmer here on the cash market as we go. I don't know if we're going to get on top of 230, but maybe we'll get some of the majors to catch up to that. I think there's at least 1 or 2 of the majors that still need cattle for probably as soon as early next week. So that ought to drive the bus in that regard. I think as you look forward here to what probably will be the smallest weekly kill on cattle since COVID. I would say very close anyway. When we just weren't open at all, hardly anywhere. I've been watching. Here's what I'm watching, and I don't want to belabor the point, but we got a cattle on feed report on Friday, right? The guess for on feed is 98.5%, 1.5% less cattle. Okay, the actual fed cattle slaughter year to date, compared to the 5-year average, is a little over 12% less. Compared to last year, it's 4.2% less. Now that is easily explainable. We're buying cattle that we're buying lighter cattle, feeding them longer, so that inflates the on-feed number just because they stay on feed longer. But yeah, you know what I'm watching here. I'm watching to see what do the weights do compared to what the slaughter is, and where is that going to somewhere project here where we lose this super leverage that we have now. It doesn't look like it's anytime soon. I don't want anybody to get jumpy here, but that's the fundamentalist in me is going to be watching that very carefully. I would say we finish the week very strong. We'll come into next week with a short week, Gil, for a long week, and we should be looking at having some leverage again next week and a wider basis probably.
All right, very good. Thanks for the comments. Give us your contact information for folks that like to follow along.
Look us up at kkbtrading.com or 712-722-0023. Thanks, Chad.
Thank you very much, Brad Kooima and Varilek there in Sioux Center, Iowa. And if you have a question that you'd like to like us to talk about here on Cattle Call, put those in the comments. Let us know. And who knows, maybe Brad and I will pick your question for next week. Thanks for joining us on this edition of Cattle Call, again brought to you by Wolf Auto, Small Town Strong. I'm Chad Moyer.